Hi all, welcome to Token Trading Research. If you haven't watched my video this year, Happy New Year. 2023, we will be looking at Trading 101. The reason why this has become imperative is what has happened in the previous year with the bull run and the bear market that has been going on for some time now. A lot of people have lost their hard-earned money, either through the exchanges or through liquidations in their trade. Now, the discussion today will be, how do you beat the market maker? Before we start our discussion, let's do some house rule. Trading is risky. Do your own research. Okay. Now, there has been a lot of people who have given up on cryptocurrency. One of the primary reasons for that is a lot of people sees it as a quick rich gambling by involving in high leverage trading. And on the other side of the coins, you have the exchanges who seize your orders. Of course, if you're on the high leverage, they push the price action to actually pick those your stop loss and liquidation points. It is very volatile. Even sometimes with low leverage, as low as 1, their scam wicks do also pick some of those low leverage trade up. I have been there, I have been liquidated many times. Now, do you just give up? You've lost everything. How do you start again? Or if you have gone back to your 9-to-5 job, you were hoping for financial freedom, you never got it. Now, how do you continue to trade and make profit and hopefully recover what you've lost with time and patience? Again, I repeat, patience. Let's pick the BTC, a case for BTC. As with other coins, some of the coins have good fundamentals and utilities. These are the things you looked at. If you looked at BTC, there will be only 21 million BTC that will be mined or created. And 19.1 million so far have been mined and are in people's hands. Between 3 and 4 million are lost. So you have around 15 to 16 million that is currently held by people, the last coin will be mined in 2140. So after then, there'll be no more coins. And before that, you find that BTC will actually have that attribute of store of value because there are few of the coins and it will be hard to get by. So I do have faith, except catastrophic event happens, BTC will retain its value, probably continue to go up. You might experience that up and down movement, but you will see a high priced Bitcoin. So if you take some other coins of interest, some of them have some of these fundamentals behind them. Again, remember BTC, if we think of some other fundamentals, like it uses proof of work as a form of validations. So that makes it much more resilient, and it's peer-to-peer, decentralized, and some others. So if you pick some other coins, they all have strong fundamentals. These are the things you looked at before picking on a coin. Now, if you now think of all this, then you begin to pick a coin and buy the coins, hoping that when the price goes up, then you make a profit. It's simple buying and selling, not gambling with leverages. So just being the leverage trading, if you've been hurt many times, a lot have been hurt, but some people have had it lucky. This is something they will never consider. But there are people, they've really been burnt many times. I have been burnt too. Now, if you are to take the alternative to leverage trading and buying some meme coins, investing in those meme coins, hoping that they are going to make 100x and you've been burnt many times, then you have to stop gambling. You only live once mentality has to stop. It will bankrupt you. Because it is a zero-sum game. Whatever price increase you get, someone is losing at the other end. That is how the market maker are able to move the price of asset. So if they move it up, at some point they will bring it down. So they are able to make some profit by hitting those liquidation points. If you make profit, you do not take it away from the table, you will be liquidated if you are on a leverage trading. So greed, or how much is enough for you, that is another problem. I've seen a lot of people crying, oh, they exited trade early. Whatever they make as a profit is never enough for them. You have to think about that. Now, if you need to beat the market maker, you have to have patience. If you have those fundamentals that the price is going to go up, wait, it is going to go up. It's just as BTC that was at the lower part of 15K, even in some exchanges, it actually goes to around 14,900, somewhere there. So if you were someone that have faith with all these fundamentals that BTC will rise up, by now you'll be sitting on top of some good profit. From 15 down to 23, that is almost 8 grand for just one Bitcoin. Even if you have half a Bitcoin or even quarter of a Bitcoin, you'll still be able to pick $1,000 or $2,000 as the case may be. So that is quite some good gain. Depending on how much you're investing, then you probably will have more gain on this price movement. Now, having said that, and I'm going to proceed to look at the chart. Right, so what we have in front of us is the Bitcoin chart, and this is on the monthly chart of Bitcoin. So the observation here, this is from 2019 to date. You find that any pump or any markup of price action, you also have a reversal down or markdown price. So what happens here is, if the market makers have driven the price action up, they have to be able, they provide the liquidity, they have to be able to make profit from the market. So those who made money here, if they haven't taken it away, or some who bought here, if they're on leverage, if they pull the price down, they get liquidated. Even if you have invested a lot of money, you have a deep pocket to withstand the margin call, at a certain point, you will give up. Exactly what happened when Bitcoin dropped from 69,000 down to around 15, or in some exchanges 14,900 or 15, to I think it actually dropped down to here, 14,906. So you can imagine, if you have been trying to put more margins or more money into your leverage, by now you would have run out of money. However, if you have bought the asset at any price, the coin is still with you if you are not on leverage. And when the rally comes back, or when there is an upward movement of price, it probably will pass that price point you bought the coin. For example, there were people who bought BTC or Bitcoin at 20K. By now, they are sitting on profit if they are not using leverage. So you could beat the market maker by avoiding leverage. Now, how are you going to trade BTC if it is this bull market? Now, if you look at what we have here, we looked at the resistance points. You could actually trade with some moving averages, exponential moving averages, and some line on your chart, so that you target some key locations or price points where you want to enter or where you want to exit. Okay, right. So if I have this horizontal line there, this was where your BTC, when it dropped, that was the lowest point there. Now, if you look at the left-hand side of this on the monthly candle, you probably will see there is a candle here that actually started at around 32,000 or so. Okay, let's just draw something there. Now, if you were a swing trader, you probably would buy a coin at this point, maybe around 15, around 16, even around 23, and hope that the price action rally to 32,000 or so, then you make a profit and exit the market for the pullback. If you are a day trader, you might not have time to wait for that. You are probably looking at an hour candle. In that case, you will be using Fibonacci to look at the retracement, to project the retracement and enter again after a profit has been taken. Now let's go down to a lower time frame of weekly there. So if you look at weekly here, you find that currently, since the beginning of the year, we've just entered the bull market. It has been upward price action. It is not going to directly just go down to 100,000 or whatever price that everyone is bundling around. It is going to always retrace. So if I think of a day there, I'll just reset my chart. Okay. And at the moment, we are at 23,000. Now, if you look at on the left side, there is a red candle there. So these are the drop. So the next price point, as we have specified, that will be 32,000. Okay. Now, if it decides to go down, the next retracement point will be around 19,000 there. So those moving averages I have there is the exponential moving average. That is the 50 moving average. So if you were a swing trader, okay, let me do this and let's make our screen bigger. If you were a swing trader and you have the patience to wait, so what you will do is you probably will say, I'm not going to take profit not until it gets to 32,000. Then you will have a fib . Okay, so that is a fib there, a Fibonacci retracement. Then you probably will be looking at when it pulls back again to 23,000 or 24,000. You probably will think of that. Or at the worst, then you will look at 21,665, somewhere like that, or 22. Right. So that is how you are going to be looking at the market. Buy the coins, not on leverage, although you will invest more money if you're not using leverage. But you're not going to lose your coins. You just need to have patience. So when the price comes back to your entry points, then if you make a profit above that, then that is all depends on you. How much is profit for you? You take the profit, then do a retracement, use a fib as I've just done. Look at where the 0.5 or 618 is and enter again. You might have a scenario after you have entered in the golden pocket of 618, the price fall below that. You are not afraid of liquidations because you are not using leverages. Now, if I proceed to drill down further, you could actually be looking at 1 hour. Let's look at that. So if you are looking at 1 hour, you probably will be thinking of day trade. So these moving averages becomes quite useful, because if you look at the price movement, the price action always retraces back to the mean, to the 50 EMA, 50 exponential moving average. Can I just remove the session VHD there? Okay. Right. So what we have here is, if you look at the 50 moving average, it always come back. In a bull market, you've observed that the moving average will be chasing the price action. Okay, so before the retrace happens, the moving average is actually going to the price action. But what happens at the end, you find that during the retracement, those green candles that have been created will all be recovered back. Now, for some days now, the price of Bitcoin has been going up, and a lot of traders are hoping for or are expecting retracement. So what is going to happen when retracement finally happen? It will be one of those big drop that even the 8K has covered within some few days can actually be removed, or can actually be decimated within some few minutes or few days. So you probably find that it will retrace back to those gains it has made. Okay. Now, if you are not on leverage, we're speaking about leverage today, there's no need to worry because your coin is still there. Now, there are exchanges where you can trade with, where you can buy your coins and hold it, or store it in your ledger. Example is Coinbase. That is an example. And in my description, you will see a referral link there. If you want to think alternative to most of these exchanges that gives you a lot of leverages. Some of them also, you could buy your coins and do spot trading. So spot trading also prevents you from the pitfall of leverage. Thanks for coming, or thanks for watching this video. Please do consider considering subscribing and press the notification button so that when I post a video, you will be able to get a notification. And I'm going to be bringing videos out. I look forward to hearing from you in some live sessions that will be coming in future. Do like the video, please.